Start of another exciting week in the world's global financial markets. There's a lot happening that isn't good in the world, and unfortunately, the problems in the Middle East look like they are definitely going to escalate beyond even the escalated level they are at the start of the week here. It does seem almost unavoidable now that things will get worse before they hopefully get better, unfortunately. This means that gold and oil are going to be very supported, very bid. And in fact, oil could have a runaway break to the upside over the next 1 to 2 weeks. Still very bullish there. I think the outlook for oil fundamentally is very strong as well. There's going to be plenty of fossil fuel demand for many years to come in the world. We shouldn't get ahead of ourselves thinking that alternative energy supplies are going to dampen that demand anytime soon. The outlook for equities, we saw, as I thought would be the case, equities tiring quite a bit in the US market on Wall Street on Friday. And of course, the Dow eked out a 0.09% gain, but the US 500 and the NASDAQ were down markedly. The European market was down significantly as well, but it might rebound a little bit on the Monday. As per usual, US futures on Monday in Asia are attempting to rally. The rally isn't as strong as it usually is on a Monday, so I think there's grounds for caution there. The Australian market is particularly, sort of igniting some alarm bells. Very bearish in the futures on Friday and is again very weak today in the Australian trading zone with not a lot of bounce back. I'm kind of adding to my shorts on the Australian 200 index and some Australian stocks, but I'm being a little bit aggressive in doing that, and it may not be for everyone. I've got a fan bug here. It may not be for everyone. I think, though, that everyone should be aware that there are significant downside risks in the equity market at the moment. We've seen the 50-point rate cut from the Fed and the market is getting tired. One thing, sort of a left field idea I wanted to suggest to people just to be aware of, because remember here we're very much about protecting you against any unexpected by others downside. There is a high risk scenario here that the US elections will lead to a close outcome. And I'm not taking either side here. I think whichever side of politics wins the US presidency and the Congress is likely to lodge an awful lot of legal appeals across the country about voting irregularities as they perceive them to be. So regardless of who wins, it's going to be a cantankerous affair after the vote. Now, this could be complicated by the fact that Mike Johnson and the US Congress looks likely to approve an emergency funding bill for the US government this Monday. And yes, the the government is again close to running out of money and trying to create some emergency spending plan, which will carry the federal budget through, I think it is to about October 1st, which is only a few weeks after the US elections. And if there's still a lot of uncertainty about the result in terms of either party's mind, or a lot of bitterness about the result in terms of either party's mind, it may be difficult to extend that funding from that October 1st date. So I think there's a scenario building here where we could see a deterioration in the outlook for the federal government being able to fund itself in the United States after the election, for that sort of confluence of factors coming to bear there. Gold, we've been buying gold for many months and we still are buying gold. I see it as having strong fundamentals and unfortunately also experiencing the catalyst of geopolitics. Now, I notice a lot of people commentary in the mainstream media today about gold and oil is sort of giving other reasons and not really spending too much time on the Middle East pressure to the upside for those markets. I would suggest to you that many Middle Eastern countries Many interested parties around the world are building their oil stockpiles from a military strategic point of view. And I'd also suggest to you the same thing is happening with the gold market, and particularly among wealthy individuals of the Middle East across the region, deciding that they need to hedge their exposure to a broader conflict which could impact them directly by buying gold. And in this environment, there is the situation on the horizon where gold sellers kind of evaporate. And that's why gold could have a very sharp upswing. And also similarly with the oil market. Currencies, the US dollar is really on a tipping point now. Is it going to be supported by geopolitical tensions? Remember, I told you all that the US 10-year bond would be sold off even if the Fed cut rates, and that's exactly what's happened. Everyone else seems surprised. I thought that was a no-brainer. I've added to my short US bond positions today in terms of price. In other words, still expecting yet higher yield at the long end, regardless of what the Federal Reserve does. I've explained the reasons for that multiple times before. So in terms of the US dollar, it could benefit from geopolitical tensions deteriorating, and it could benefit from that higher yield. The alternative is that the US dollar just begins to crash, one of its more significant historic crash periods, on the basis of there could be much ado about the upcoming US election. After the election, I think a lot of people are in the frame of mind, or at least when the election happens, we'll be past all of this. It could be just the start of some quite significant jockeying politically and legally, and therefore a period of great uncertainty for the United States post the US election, and that complicating the federal budget funding, which means that we could have a situation where the US dollar is savagely sold on the basis of such uncertainties, and despite geopolitical tensions and the higher bond yield. There will be an expectation of further Fed rate cuts. Economic data in the US is bouncing around a little bit, but it's still very suspect. I think I'm willing to go with a break of the range in the euro or the US dollar yen or the Aussie dollar in either direction. And I'm watching it very closely, more closely than usual, over the next few days, because I feel that the US dollar is at a point of decision. And if it was an animal, if you like, it has to choose what is it really going to be dominated by: fiscal crisis, government crisis, political crisis, funding crisis, or by the mere fact that because of all of that, the United States has to pay more for its borrowings, which means the bond yield has to go up, and also the geopolitical tensions. Whilst the US dollar used to be a safe haven, perhaps the biggest safe havens now are currencies like the South African rand, the Australian dollar, and the Brazilian real, which I've referred to previously. That could be the case, that the US dollar is able to collapse even if there are raised geopolitical tensions. But as I said, I'm sort of setting traps either side of these markets to go with whatever trend develops. But I think you should all be very aware that there are potentially very significant trend developments on the horizon. I hope this helps. Don't forget to check out propx24.com and my own website, cliffordbennett.com.au. All the best for the week ahead. Thank you.